This is the Crypto Day Morning. Today's date, 23rd of October 2018, and it's a Tuesday. Welcome to the Crypto Day Morning. Trades, bets, and anything of the like in which you or anyone else does is always within one's own risk reward. What I love about the crypto game is that's exactly it. It's my own risk, my own reward in the decisions in which I make. And amongst the trading game, getting in and out of positions quickly if needs be, that's what is so magnificent. This trend. Yesterday's session, a high of 64.29, a low of 63.72. 28 plus 29 is 57 points. So it was not quite 1%. The day before, the differential was $69. A microscopic hair above the 1% number. In today's session so far, a little past the halfway point, a high of 64.19, a low 63.54. Differential 46 plus 20, 65. Pretty much right at 1%. So the movement's just staying in the 6,400 area. Not doing too much. It's been a descending triangle rather, to the downside. Matching lows in and around this number, around 61 mostly. And then all of the lower highs. Now I normally would consider a symmetrical or a descending triangle bearish. However, where did it come from? And it came from an up move. So it's difficult for me to say it's bearish and such if markets were in a nice little downtrend and then it had that pattern, say something like this. I would be very bearish about that situation because its primary trend, as we can see here, would have been lower. But the primary trend for what's been going on has been higher. Now, of course, if there would have been the opposite of such, because the opposite of what I just showed would have been an uptrend with an ascending triangle. So say you have something like this, then you have the big fall, which was, I say something like this, and then it comes back here like that. This would be a more bullish pattern. Now that's not the pattern, of course, but what I look for within an ascending triangle or a descending triangle, an ascending triangle is higher lows matching highs, descending triangle, lower highs matching lows, is for it to share its primary trend beforehand. So before all of this started in here was an up move. So I'm not looking at this as, ooh, oh man, this is so bearish. I mean, it could come down still to 3. But just because it's got a very bearish pattern, thus being a descending triangle, it doesn't fulfill its complete obligations for me to be very aggressively short. But I realize that within where we stand right now, that this is the play's got to end here. The pattern has got to end. Because just in the volatility here, this is, I mean, most of these periods, like just an average one like this one here, has a high of 7,700, a low of about 7,240. So that was a differential of 460. So, I mean, 5%. But the previous period, a differential of 115, not quite 2%. And this is a 3-day time frame, not the daily as well. So a lot of people see the exact same pattern of the lower highs matching lows. It's relatively easy to notice, and it's getting to the point where because of the end of time, it's almost like it's in overtime in a basketball or hockey or American football game or extra innings in a baseball game, and the completion of such has to come into place relatively soon. Okay, so I wanted to talk just mainly about the ascending descending triangle. Again, if I'm seeing an ascending triangle, I'm hoping to see an uptrend beforehand, very bullish pattern. A descending triangle, I want to see it come from a down move. So if it were to say do something like say go to 3,000 and then start another descending triangle, maybe go 3,000 to 6, down to 3, up to 5, down to 3. At that point, okay, that would be more scary. But and then we look at these 6,000 prices when it comes down to it. There's been many opportunities and scarce to many opportunities to buy, many scarce to 3,000. And back in the day in here, there was many opportunities to buy at about the 2.25, 230 and lower, with many scares that this thing was going to go like way down to probably 100. But it never did go down to 100, and only those who were trading these with decent memories would remember these times. For today, why do we really care too much about where the market was back then? And I say that because in 2 years from now, 3 years from now, this is just going to be a history footnote amongst 6,000. Well, lately I've been showing altcoins. I'm going to quickly go over a few ones to end this video. I'd like to thank you for tuning in and have yourself a great day. So, quick turbo shout out to some altcoins to end. Starting with AGI or Singularity Net, which was showing a lot of strength amongst the 18 average of highs previously before this rally. And within yesterday's and today's session, showing a nice breakout amongst the 18 average, very close to this previous level of previous resistance in here. Next up is VIA, which is showing a nice little possibility of breaking it past this 18. Lots of resistance amongst this 1,090 or so Satoshi mark where it's at now. Definitely good potential amongst this coin. And finally, Golem GNT, which also has been leaving the 18 average. It did so a couple days ago. Pause day yesterday, but it was a good pause day given where it came from, and then looking like further acceleration moving forward. Taking a look at this amongst the 3 hours, we can see the higher highs, higher lows. And what I like about this pattern in here is the previous period did have a nice volatile session, so it had this price correction in here on the low end, and it's having another one again as well, single hour time frame. I would be looking for this to have a decent chance over the next little while, like the other two that I've shown, of having some decent gains going move forward. Of course, the market's going to do what it's going to do, and everything you do again is your own risk reward. Thank you for tuning in. Bye bye.